Good morning everybody, welcome back to AZ Trading, hope you're doing well. I've just woken up and I've got another banger of a trade to show you guys. If you haven't seen my previous video, we managed to capture this large bullish move on the USD CAD, so check that out if you haven't done so. But for this video, we're back on the indices, the US 30 on the 14th of September once again, where we found this large bearish move on the Dow Jones, pocketing almost 300 points, which is not a small move by any means. If you're a returning viewer, you know exactly what's coming and what separates us from all the other trading gurus. It's the proof and the executions. So I'll just turn them on now and the labels, and you can see that this is where we took our entry position and where we took off 90% of our trade, leaving 10% of our position to run and getting stopped at our break-even level. Alright, now with the executions out the way, let's get into exactly what we saw in order to capture this bearish move. I apologize if you hear some construction noise. I hope the mic doesn't pick up too much of it. But as always, the pattern we use to find most of our trades is the RMR pattern. But before we even look for the RMR pattern, we'll need to have a general directional bias to choose whether to be a long or short during the day. And one method you can use to find your bias is by comparing the Nasdaq, S&P and the Dow for similar objectives. So I've just clicked onto the Nasdaq and we can see that price has left these relative clean equal lows that have not been raided yet, which means that resting below there is sell side liquidity, which is a likely objective in the future. So with just this in mind, so as the day progresses, we'll be looking for short RMRs in order to capture a bearish move towards these equal lows. And that any sort of bullish patterns that form, we'll be ignoring them since we want to be trading with the bias and not against it. This doesn't mean you can't make money longing this market. It just means that over time, when you trade with the bias, you're more likely to be profitable. Alright, now that we've got our bearish bias in mind, you might be wondering, why did I choose to pick the Dow to short and not the Nasdaq or the S&P? And to find this out, we can do a quick strength analysis between the three. So just prior to our entry, we can monitor this high over here and this recent swing high, and we can see that the Dow made a slightly higher high. Now we're on the S&P and we can see that those highs have made a higher high. And finally, now we're on the Nasdaq and we can see that those highs have very distinctively made a much higher high. What this tells us is that the Nasdaq is the strongest, the S&P is in the middle, and the Dow is the weakest of the three. And so since our bias is bearish, so we're looking to short, of course we want to be shorting the one that is the weakest, which in this case is the Dow. And that's just a quick way you can do a strength analysis to pick between each of the indices. Alright, I'm just going to blast through this RMR because I don't want this video to be so long. So first we look for a raid. So above these equal highs, we made 3 instances of swing highs. So once we reached above that area, we call that the bullish raid. After a bullish raid, we look for a market structure shift bearish. So we've got a swing low over here. As soon as it broke that, that'll be our market structure shift. And finally, the third element, which is the return. In most cases, we can find a gap. So here on the 3-minute chart, we can outline this gap over here. And if we zoom out to a 5-minute chart, we can see this gap a bit more clearer. So as soon as price retraces into that area, that's where we can place our short. And if you're not using a gap to return to, you can be using an order block. So this bullish candle over here, if we extend that one out, we can see that price has given us multiple opportunities to enter by retracing into that order block. And so both these areas can be opportunities to place your shorts. This shows exactly how large institutions trade, since they can't place their entire bulk order in one moment in time, so they're given multiple opportunities to place their orders. And as retail traders, we can see these retracement price legs as multiple opportunities to enter your position. So let's say we've placed our short right there. First thing you must set, you can never forget about it, is your stop loss. So in my case, is at the top of the raid right here. And once you've done that, you can start to outline your objectives below. Alright, so the way I take objectives are at areas of liquidity, so different swings, and areas of gaps. So whether you take a partial off at every single objective on the way down, or you decide to take off your entire trade in one execution, that will be completely up to you and your trading framework. But for me, in this case, I took off my first partial at this swing low down here, and I took off 90% of my order, leaving 10% to run. And as soon as I did that, I reduced my stop loss to the break-even level. And as you can see, as price progressed, I woke up and I saw that my 10% was stopped out at my break-even level. So that'll be it for this trade, guys. If you'd like to take a naked screenshot of this price action so you can label the RMR yourselves, here you are. And if you enjoyed this video, give it a like and subscribe if you want to see more content from me. It makes me very happy. Once again, if you've got any questions, leave them down below. I'll reply to every single one of you. But until next time, take care everyone. Peace.